Okay, good morning, everybody. TG here. Boy, we've had a ride today, haven't we? I think we've been doing pretty well. So, we had a couple short positions and we nailed those. We exited them, I mean, really pretty much about the right spot. And then I flipped it around, put on a put credit spread, and the market has now immediately bounced as well. And we are about plus 50% on those put credit spreads already. And it's been a matter of minutes since we've had that on. And I put them on about that. Let's see, the strike is 6,600. So I kind of don't think we're going to be coming back to that. So I think we're going to leave that on, see if we can get a little bit more than 50% gain. But yeah, kind of nice moves for today. Done a pretty decent job so far on this stuff. Okay, so let's kind of take a little bit of idea in through this. And remember, I'm out there on the social medias right now. So we got X and Facebook and LinkedIn and YouTube and people out there. So if anybody is looking at that, just remember simplertrading.com/Moxie is where you can kind of find more information about me. And I'll be doing this for about 20 minutes with the social media stuff, and then I will throw it back to Moxie Room only. Jim, yes, I did get I did get out of the UVIX thing. So if you need to scroll up and look at the alerts that I put out, we got out of the SPX put debit spread for 138% gain. And we got out of the UVIX stuff. If you did stock, it was plus 21%. If you did calls, it was 185% on those trades. And we put those on Friday. So right here, Friday is where we put on the put debit spread for the SPX. And we went long on the UVIX. And we exited those right there just a few minutes ago, which was awesome. So yeah, pretty happy about that. Now, part of the reason, yesterday we did get a little bit of a bounce. We basically closed here. We got a little bit of a bounce at the end of the day. I didn't think it was done yet. I figured this market's still going to be coming down. Also, think about some of the things that are happening this week. We do have Nvidia coming out now. I originally was thinking, okay, market is probably going to be weak going into Nvidia because, well, the market has been weak. And I just don't see anybody being like, let's go throw everything we have at the market and Nvidia right before earnings. So that's probably not going to happen. And then we also have jobs report coming out Thursday. Now, I don't know exactly what's going to be reporting and everything. I think a lot of different things are because there's a lot of backlog. And I could, I'm kind of thinking about this and I feel like I could see the market being nervous about that because they don't know what the information is going to be. Is this going to be good news or is it going to be bad news? Doesn't really know. So I also kind of thought the market was going to be weak leading up into that. Plus Friday was weak. We continue to get rejected by these moving averages. Yesterday, we were at a double bottom. I didn't think that was going to hold. And here we are moving down even a little bit further. And basically, by the time that we were looking at it this morning, I think things just got really, really stretched. You can see here, it kind of hit these, well, outside of the 30 ATR, then hit the 30 ATR. And you can see we even pulled away from the hourly 8 EMA. So just really stretched. And the other thing is, if you look left, you can see right here, we're coming into the lower end of this range, which for those of you in the Moxie room, when I was posting about this morning, I said, I think we can go lower, but, we'll have to see what do we do about this range. If we do continue to go lower this week, I'm then targeting 6,500. That happens to be where this trend line is. And it is the weekly 21, roughly. So you can see something around there. And so that's kind of wondering like, well, since now we've broken the weekly 8, then generally my next target is the 21. And so that we will have to see if that is the case. As far as the day trade, the other thing, just other than knowing that this was getting kind of extended, look at today's price action on the 2-minute. First of all, here was a level, it bounced, and then came back down. This is where we took off our trades. We exited the short trades. We exited the long UVIX right there because I figured, okay, getting extended, and this could turn out to be a double bottom. But I did not go long yet. And you can see that was a good thing because right here, it broke. So maybe, searching for liquidity, trying to test some things. There's your undercut. And then look what it did. It came back up. And we went long right there. Basically, on the 2 minute, we went long when the 8 crossed over the 21. You could see the Moxie indicator was positively diverged. And you could see this was right when price was starting to get past the 2 minute 50. And yeah, that's when we put on that put credit spread and nice pop. And if we look at the internals, there's really not too much to work with here yet. You can kind of see that maybe the ticks are turning up a little bit. Order flow not looking too bad, but again, to kind of catch this turn, the internals were not really helping me, so I wasn't really using that. And then if we come over here and we look at the UVIX, this was another thing that I was using because remember we were long, and I even put this in the weekly video. So for those of you out there on the social medias, assuming that you're not subscribed to the Moxie Room, otherwise you'd be in there. I did talk about this over the weekend, and that is where we went long because price was starting to hold that moving average. And you can see here that's where we sold it, just because, again, I think it was getting stretched. This does not necessarily mean that the downtrend for the market is over. The market could go lower. I'm just saying for this particular move, it was getting very, very stretched. And you could see that the UVIX was basically floating in midair up here on this time frame. And I thought, you know what? These are some short-term moves. That's all I was looking for. These options that I have, I have them until Friday, but basically I just wanted to make sure I didn't run out of time in order to get a move that I thought was happening. And basically with this move, the UVX was 21% gain, which meant, what was that, 185% gain on the calls that I put out there for the options that I put there for you guys. And then because of this, I figured, well, if we're done going up and we're going to come down, then let's short it. So we went long on the SPX. But you can also see here, look at the 15-minute time frame. You can just see how price right there was getting very, very extended for the day. And then right here, you could see price started to break down. And there you go. That's a summary of the morning so far and how that goes. And let's see, crowd. Yeah, they sold AMD. Great. Yes, we did have that. We sold half. Now, here's the other thing. If this market wants to continue to go lower, which is certainly possible because we've got NVIDIA and we have the jobs report coming up, the SPX right now could be just coming into some level and could be bouncing. We could go lower. I can't say for sure. We never know. But I'm kind of wondering, there's still a gap here between price and the daily 50. And we are at a level for AMD, which that's why I took half off because, we could be at a double bottom. But I also don't see anything that says go to buy it right now. And I'm kind of wondering if we're actually going to come down to this area for AMD, which if you go left, basically takes us to the daily 50. So I'm just kind of wondering if there's actually a little bit more downside here. And I would imagine that if there's downside on AMD, well, there's probably going to be downside on NVIDIA, which means there's probably going to be downside on the SPX. So I am out of my short-term trades for the market, but I have half a position of shorting AMD or AMDL stock. And so I figure I'm pretty lenient on that. So I'm not too worried about it. And so that's where we're at. Marco, let's see. I could try and describe more of what's going on here. I'm trying to think as far as these trades. I think the biggest thing that you probably need to at least study or learn from anybody at Simpler is some of the acronyms. So for example, if it's a PCS, that is a put credit spread. And really the biggest thing is credit. So if you're going to be selling a put credit spread, then you're expecting, you're taking in premium and you're expecting price to go up. Versus a put debit spread, that's usually mean you're buying it, and if you're buying puts, you're usually wanting the price of the underlying to go down. So that's when we were shorting the market. Same thing with a call credit spread or call debit spread. If it's a credit spread, usually you're selling it for credit and you want price to go away from where you're selling. So if you can just kind of make sure you remember those kind of things, that'll really help you. And I do think it's important that you guys know this kind of stuff because number one, it's a lot to type out. Number two, people use these things all the time. and it's just lingo that you're going to need to know. But if you have questions, we have lots of people in the room who are always here. They're willing to help. We've got a good group, good number of people in there, and you can also ask questions on these alerts. Sometimes I don't see the questions on the alerts because really on my end it just dings, and I'm like, okay, where did that ding come from? But just yeah, ask questions. If you ever have questions, I don't want you to be losing money just because of misunderstanding of something. So yeah, absolutely, that's what we're here for, and just make sure, yeah, you make sure you fully understand what's going on out there. Okay, Nvidia. We have earnings. I have no idea. Earnings are always a crapshoot for me. I don't think you ever really know. I think a lot of people are kind of, have been leaning on NVIDIA for quite some time to figure out, how's this whole AI situation going. And I think, yeah, I think a lot of eyes are going to be on NVIDIA this time to see if they can save the market a little bit. Because as we know, recently, AI, data centers, small caps, those kind of things have been just getting demolished over the last few weeks. And I think everyone's kind of looking for news to see, is this in fact a bubble? Is it in fact over? Did they overspend? Did we overinvest? Where do we go? And I think that's part of it. But then I also think the other part of it is, I feel like we kind of get this market back on track again. I don't know what's going to do it, because remember, the government's open again now. You would imagine that the Treasury General account is flowing, so we should have liquidity, and yet that didn't stop the market from coming down. I think whatever was in motion has already been in motion, and now we need to. It seems like the market probably wants some data, and so that's where we're going to get jobs data. Maybe eventually get CPI. I think the market wants to kind of know what's going on with Jerome Powell and FOMC, the Fed, coming up in December for rate cuts, because I think that's the other situation. Is bad news yet, or is bad news still good news? Like where are we at on that? And so I think that's why the market's kind of like, we're gonna pucker up for a little bit until we can kind of get some more information out there. So that's what I see. Now, the other thing that I was looking at around, even though the market was going down today, what I noticed is that some of the risk on areas were actually starting to bounce, or were actually up today. And there are two things I can say about this. Number one, these kind of names, think about risk on, or think about crypto and everything else like that. They have already been going down for weeks, and getting really, really hit very hard. So at some point, they are going to reach a level of support, and they're just not going to go down any further, because they're like, look, the risk to reward on the downside isn't there. We think this is value. People will start stepping in and buying it. And at some point, even though the market might still come down, because now what's happening is they're starting to bleed out the mega caps. And I think that's what we saw. I think Microsoft was down today, Amazon was down today, stuff like that. You're going to start seeing it start with the risk on, and you should see it finish with the mega caps. And that's why I think we continue to see some weakness in the mega caps today, even though the market. The weakness in the mega caps, the weakness in the indices, even though the small caps and the crypto and stuff like that were actually bouncing this morning. And so I think we, fingers crossed, and I can't say it for sure yet, but I want to say that we're getting close to this pullback being over, partly because I think I'm starting to see some money come into the risk on assets, like, Ethereum's bouncing today, Bitcoin's bouncing today. Obviously, I would imagine MSTR kind of bouncing today. It's a little sliver of hope. It's a little silver lining here, but you can see that these have been absolutely demolished. I mean, they've just really, really been wrecked. And at some point, fair value is going to come in and people are going to buy it. And then plus I look at the SPX, and, yes, we've dipped below the daily 50. And I think if we can get closer to the weekly 21, then we can kind of find some support too. And so I think that's something we're looking for as well, to figure out when this thing is going to kind of be over and done with. Let's see, FNGU. I want to look at this real quick. This is the mega cap FANG stocks, and they've been coming down too, but look where they are. They're starting to come into this big congestion area right here. So again, it's like, how much further are we going to go down on these things? And at some point, I do think we're still in a bull market. This has just been a dip. Some of them have dipped way more than others, and that's kind of been the challenging part. So for example, if you look at something like ARKK, really big move down. But we are starting to come into a previous price area. So you'd imagine we're going to start finding some support. Buyers are going to come in, probably defend this area. You can also see just this down move for the last week or two is starting to get pretty extreme. So these are, that I would not be short anymore. I think these things look like they're about ready to get a bounce, at least a bounce. And if you look at the IWM, same kind of thing. It's gone basically straight down for the last few days, but I think we're kind of coming into an area where we could be seeing support. If you look here, I mean, we're coming into the weekly 21. Okay, start looking for opportunities. And then you can look at FFTY. This is the IBD 50. This is kind of like definitely the risk on sector. And look how much air has been let out of that. And you can see it's also starting to come back into a pretty big price congestion area. So it should be getting defended. And if you look at the weekly chart, you can see here it's down to, it blew past the 21. So we're down here at the 30. And you can see here it's also down to the monthly 10. So again, I feel like either the short side is kind of getting a little overdone, or these things are starting to come into what I would view as longer term support. And that's why we're just kind of waiting for this weakness to work its way through the food chain and, get done with everything. So yeah, that's kind of what I'm seeing in through here. You guys have anything else that you're kind of weighing in and checking out? All right, so let's kind of keep going around. Let me take a look and see what let's see, come back over here. Let me look at the SPX since we do have that put credit spread on. We are at plus 42%. Okay, not too bad. Just want to see if we can, look at this. So it's kind of one step at a time. This is what I always talk about and teach you guys is that, taking it one step at a time. The first step was right here, needing to get price past the 2-minute 50. And oh, look, it's almost like a twin. Now we have price right here at the 5-minute 50. So now we need to get price to navigate that and see if it's going to go a little bit higher. The other thing about this is that if we look at the 15-minute time frame, do you guys see similarities between here and here? And what I would point out is that I think price is very, very far away from the 15-minute 50. So that is the commonality that I'm trying to demonstrate to you guys. That is part of why also today I thought that price was getting pretty oversold and that we should, number one, get out of the shorts, which we did. It was great. And number two, we should probably expect a bounce. Now, that's the loaded question is, do we get a bounce or do we just get a flag? Because with price being too far away from the 15-minute 50, sure, it can fix that by going up to it, which would be a nice big bounce, kind of like that. Or it can fix it by going sideways, and price does not have to go up. It could just go sideways and allow the moving average to come down. And that's a different play. This is partly why I've come around and I like to do credit spreads, because it means I don't have to be as directionally correct. All I have to do is put credit spread right here, and as long as price just stays above it, I'm doing great. I don't need if I put debit spread on, meaning I'm going to buy it, I need price to go up, thinking, oh yeah, price is going to go to the 15-minute 50. I don't know if that's going to happen or not. But what I'm pretty certain of is price is probably not going to stay at 6,600. So that's why putting on a put credit spread, I think, is a better play for things like this when you don't exactly know where price is going to go. You just need to make sure price goes away from the level that you originally initiated on. And a lot of times I find that to be easier. Okay, let's see. So that's been about 20 minutes with you guys out there on the social medias. Definitely seeing some eyeballs out there. So hopefully you guys are doing well. Oh, actually, I got a couple questions. What's my definition of a bull market? People are getting fooled by the bounces, overside, I guess, oversold, never gets done. So iPod, if definition of a bull market, if we're just going to be looking at the SPX itself, clearly I think that we're still, it's hard to argue that this is not an uptrend. We've only just now broken the weekly 8. That's not bad. And you can see that numerous times before, coming into the weekly 21 is just fine. I think that if you're looking at a longer term something, basically when you start to break below the weekly 21, or you've got the 8 that crosses below the 21, then yes, there has been a trend change. Now, we don't know if it's a bear market, because you can see here that the difference between a bear market and a correction, yes, you got those moving averages to turn, Yes, it was a big move, but it was a correction. It wasn't necessarily a bear market. And then you back out. Let me actually zoom out just a little bit further here, give you some more time. And so yeah, you're looking here, and you can see here we got just a little bit of a dip. Almost, you got that moving average cross. That was correction. It was about 3 months, I remember, but that was actually a perfect pullback into support, and that is what spurred the next big bull run. So again, that's just a correction, even though maybe near term it feels like a bear market. Something like this, where we do actually start breaking down and breaking down below the 50 and the 30, and actually we trend down for a year or two. That's a bear market. Yeah, definitely a bear market. So no, I would still say we are in a bull market. We are only on the surface up here are we pulling back. Now I understand beneath the surface there are some stocks out there that are looking pretty rough, and maybe you can call them bearish, but you need to say, well, is it just bearish on a lower time frame, or is it bearish overall? And that's why I try to say, okay, what time frame are we discussing in order to really talk about that? Because this is really just a pullback, guys. You know, the thing that we're experiencing on the SPX is just a pullback. Maybe correction, kind of depends on your definition of that. Like, what percentage do you need it to be? But we're still long-term bullish, and that's why I think that we just need to kind of get through whatever this pullback is, and get some data and some Nvidia earnings out of the way, and then maybe the market can start to resume back to the upside. But a little too early to say any of that. All right, guys. So, all right, guys, I'm going to be logging off on the social medias, and yeah, thanks for tuning in. I'm going to hop back over to the Moxie room, and we'll continue carrying on from there.